So welcome back to my channel, and we are in another episode of using the valuation calculator within Investing Accelerator. So the previous episode, I made it a little bit too complicated. I didn't explain enough. So then this episode, I'm going to go through this calculator in a little bit more detail so then you understand what it means and what we're looking at. And if it is your first time here, then I'll also include some basic training near the end of the video, so make sure you watch till the end. And if you like this kind of video, then subscribe and let me know what other stock you want me to look at next. So in this video, we're going to be analyzing AMD, Nvidia, and Intel using this tool. So let's get started. So right now I have AMD, and the purpose of this calculator is to see whether the stock is over or undervalued. So the current price of AMD is $73, and there are 4 different ratios here. So the most common one that everyone knows is the PE ratio, which stands for price to earnings ratio, and AMD PE ratio is 27, and the industry average is 26. So that means AMD is slightly overvalued using this ratio alone compared to the industry, and it represents a 4% overvalued. So it's actually almost there. So that means AMD projected price is $70 using PE ratios alone. Now, there are a lot of differences between the different ratios because one is looking at earnings, the second one is looking at sales, the third one is looking at cash flow, and the fourth one is looking at book value, which is total assets. So that's why when you're analyzing using ratios and valuation, you need to look at all of them instead of just looking at the price to earnings ratio. So the next one, AMD price to sales ratio is 6.32. That means using the price right now, they have $73 per share relative to the amount of sales they have per share is 6.32. Now, if they compare that to the industry average, is 7.26, which means AMD is actually undervalued in this case. So that's why it is green here, and it represents a 15% upside. So the projected price is $84. So that is good. So when you're thinking about exits and planning for AMD's future, it means there is that potential upside. Now, if you're looking at price to cash flow, which is the third one, AMD price to cash flow is 37 at the moment, and the industry average is 40. So again, there is a 9% upside here, which suggests the industry average fair price for AMD would be around $79. Okay, and finally, the last one is price to book value, which AMD is 2, and the industry average is 9. So this represents a 318% upside. Now this one you can see obviously there's a big room and a big gap, and usually I would classify that as an outlier. So within Investing Accelerator, using this tool, I automatically have a calculation to determine if it is an outlier, and you wouldn't be looking at this ratio even though it is showing you as dramatically undervalued. So overall, AMD is a great company, and it is in one of the more important sectors for the world. So then you would look at the green ones, which is price to sales and price to cash flow, as a guidance. So you can see these are your potential exit prices. So that is an example for AMD. Now the next one I have here is Nvidia. Now for Nvidia, you can see that it is all red, which means it is still overvalued compared to the industry average. Now Nvidia is the blue chip of semiconductors, so usually what you observe is that sometimes the Nvidia ratios are higher than the industry because the market gives the leader a premium. They're willing to buy the leader of the semiconductor even if it is at a premium price. So looking at the ratios, you'll see that it is not very helpful. It actually suggests that Nvidia might go lower. But then if you look at the fundamental analysis of Nvidia and what they're trying to do in terms of expansion, then chances are you would be more bullish on Nvidia instead of having a negative view. But if you look at the ratio analysis together, then here you can see for price to earnings, Nvidia is a lot higher than the industry average, which suggests the price will go down to around 98. Price to sales, you can see is suggesting to go down as well. 12 for price to sales, Nvidia, and industry average is 7.2. Price to cash flow is 46 versus 40. So this one is actually exactly the same as AMD's industry average. And price to book is 13 versus industry average is 9. So that is actually how you read this tool. And it pulls in the data and it calculates the projected price for you. So it actually simplifies a lot of the step, so you don't need to waste as much time gathering the data. So the last one I have here is Intel. Now for Intel, it is also a blue chip semiconductor company. Now in terms of business strategy, it is not as strong as Nvidia and AMD. In fact, AMD is actually gaining share over Intel. So this is the part where within Investing Accelerator, we also look at the business strategy, products, fundamental analysis, and technical analysis put together. So valuation is only like one small part of it. So for Intel, you actually see that it is really undervalued, even though their metrics are very nice. It is a really big company, so that's why you will see a lot of outliers. So for example, for P/E ratio, Intel is only 6, which is actually very low, very cheap, and they also give out a dividend as well, and the industry average is 26, which represents a lot of upside, but that is not going to be realized in the short term, so it is an outlier. Price to sales is only 2 compared to 7. Again, it represents a huge upside, but again, it's an outlier. So the more comparable one is probably price to cash flow, which is 36 for Intel, and industry average is 40. So this represents a 9% potential increase here. So that suggests the projected price is $39. And then for price to book, there's also a lot of upside, and it is an outlier as well. So it's not going to be realized in the short term. So that is basically the brief analysis for these three. The tool really simplifies on using the valuation analysis within Investing Accelerator. And if you stick around, then I also go through how to read this calculator coming up right now. Let me give you the background training for this valuation ratios calculator. So within Investing Accelerator, I developed a number of tools to basically shortcut and simplify investing by a mile. So it allows you to basically use a lot less time to analyze a stock and basically to only use 1 to 2 hours a week to invest in the market. And this is one of the many tools. Here you can see I'm analyzing Starbucks as an example. So within Investing Accelerator, we have a more in-depth training. So I'm giving you kind of like the shortcut condensed version here. When you're looking at valuations, you only look at P/E ratio, which is price to earnings ratio, which is actually only one of the 4 most common ratios. Now, when I'm looking at ratios, I look at all 4 of them because sometimes they're not reliable. Sometimes you need to look at specific ones to interpret it correctly. So that's why you need to look at all the ratios together. So for example, for Starbucks, I only have 3 of the ratios available that I'm pulling from investing.com. So here you can see that the current price is this much, the Starbucks ratio is this much, and this is the industry average I pull from investing.com as well. So this gives you a feeling of what Starbucks stock price could be if they're at the industry ratio. And this also helps you calculate what is the potential price or the valuation of what Starbucks would be worth if it is at the industry level. Now, sometimes it is not comparable because the industry figure is not reliable, and sometimes it is really far off, which requires your judgment to determine which ratios are relevant and which ratios are not. So in this case, you can see that there are no outliers at the moment, and it represents quite a significant upside for Starbucks given the amount of money and sales they're making. So if we're just looking at sales alone, then you can see there's a 66% upside for Starbucks, which obviously shows that it is at a discounted stock. And you can see PE and PCF ratio. Then when you're looking at the industry average, this looks a little bit off to me, so I wouldn't rely on it as much. And when you're looking at these kind of large increases, it doesn't get realized immediately within 12 months. Usually it would take a little bit more time to realize that stock price. If you're using ratios, you want to focus on long-term investing because the stock price is not going to bounce back to the industry level within a year or so. Usually it takes a little bit more time. But the benefits of this valuation ratio calculator is that you get a projected price calculated from comparing to the industry average. And this is actually what a lot of mutual funds or hedge funds will do. And they figure out what is supposed to be the correct multiple for the industry or for that specific company so that they can calculate the potential upside and also help plan for your exit as well. So when you're looking at the valuation ratios calculator, it is only a very small part of the Investing Accelerator analysis. You need to combine that with technical analysis, fundamental analysis, valuation, which is what you see here, news, and other analysis as well. So then you can become 95% confident when you're investing in the market. So that's what this series is about. If you're interested in learning how to analyze stocks, and if this is your first time here, then I would suggest you to check out the free training down below in the first link in the description. And if you're interested in being part of Investing Accelerator, then you can schedule a call with me and we'll have a chat and discuss how you can become a better investor and potentially accessing some of these tools as well. So I'll also include a link to book a call in the description as well. So if that is interests you, then you can click on that and schedule a call with me. And yeah, that's basically how this valuation calculator works. And if there's any other stock that you're interested in me using this calculator for you and record another video, then you can leave a comment below, subscribe, and I'll see you in the next one.